So you've lost a bit of money on MSTY and you've got your hand burnt in the fry pan. Now what? In this episode, we're going to explore the next best decision that you can make with your MSTY portfolio. So before we get into that answer of what we should do next, I got some sentiment on X that actually helps us to answer this question. And the reply that I got talking about MSTY was, I'm just going to keep reinvesting my divvies for 15 years and see what happens. If Bitcoin go into 1 million by 2040 and MicroStrategy should be at $3,000 a share, pre-splits at least, seems like it's worth just adding slowly over time. I'm pretty much just playing with house money on it now anyway. Now, the best investment decisions are always made on the margin. That is, you don't worry about whether you've made a lot of money or whether you have lost a lot of money. You think about, what's my next best decision? Now, I replied, Bitcoin could be 1 million and MicroStrategy could be $3,000 a share. MSTY could be trading at $1, even factoring splits. And this is what I don't think people understand. And so blindly investing in MSTY is a bad recipe, and I'm going to show you why. It's built into the mechanics. So let's say Bitcoin goes up plus 10%, minus 10%. Now, MicroStrategy will generally go up, a lot more. So let's just say, for the purposes of this example, MicroStrategy would go up 20% or down 20%. Now, MicroStrategy would play out more aggressively than Bitcoin because we know that it's a more leveraged play. But MSTY does not behave in the same mechanics. MSTY does not go up 20% and then down 20% depending on these movements. What it does is says, hey, I'll go down 20% along with MicroStrategy because I'm fully exposed to the downside, but I will sell my upside. So if MicroStrategy goes up 20%, maybe I only go up 5 or 10%, but then I get a sweet, juicy little dividend. And selling that upside is what we do in the covered call strategy in order to get our dividend. Now, that incremental 10 to 15% upside was sold for the juicy dividend. Now, we need to explore the implication of this over the long term to understand why and how we should be investing in MSTY, because it's very powerful if wielded correctly, but it's very, very, very scary if you're not. Who am I? I'm a professional expert. I have an academic background in finance, economics, accounting, and engineering. I have broad experience across corporate strategy, finance, including my time as head of investment and treasury for a multi-billion-dollar corporate. And my purpose is to cultivate the next generation of investors from suits to steel caps to renegade financial education and strategy. So let's compare MSTY to MicroStrategy. So MicroStrategy would go up 246% between September 2024 and January 2025. Now, we had a approximate 50% drawdown on MicroStrategy after a sort of weakening of the Bitcoin price. Now, what we'll see is that MSTY went up 91% in that time frame, i.e. it did not go up as much as MicroStrategy because it had sold that upside in return for its juicy dividends. Now, but when things went down, MicroStrategy went down 50% and MSTY went down 50%. And what we can see, again, MicroStrategy recovers, up through to July 2025, but MSTY kind of just stays pretty flat. And that is how much of an aggressive move upwards you need in order for MSTY to maintain its NAV premium. So we can see from this graph that we don't go up as much and we go down just as much. Now, over the long run, this has a very specific mathematical implication that we can explore moving forward. So here is a graph, and we're going to say, hey, Bitcoin is currently trading at approximately $100,000 a coin. We know that it's about 90 at the moment, but let's just call this index 100, which is the price that we're trading at today. And we've got Bitcoin, MicroStrategy, MSTY. Now, what happens if Bitcoin over the next 24 months moves from $100,000 a coin to $200,000 a coin? Well, we can pretty confidently say that MicroStrategy will go up more and probably be at something like 3x its current trading price. So if it's at $190 to $200 coin, it'll probably be around 600. Now, what we can have from this is we can also model out MSTY's price. Now, MSTY sells its upside, but is exposed to the full downside. So if we have these pullback, it's exposed to the full pullback, but it's only exposed to a little bit of the upside. And so what we can see is that MSTY over this 24 months is basically flat. It hasn't moved anywhere. Now, what's more important to understand is that through this period is we also have a distribution. Every week we get paid out our little dividend, our juicy dividend. Now, that juicy dividend contains approximately 80% return of capital. So when we factor in that every month, basically we get 5% of our return of capital returned to us, the NAV value of MSTY will trend down towards basically near zero. And so this is how aggressive Bitcoin's price needs to move in order for MSTY over the long run to maintain its NAV premium. So this is why MSTY has to have reverse splits. All covered call strategies have to have reverse splits because they want to bring that that unit price back up over time, so it's some sort of unit that is value or useful for you to buy. Like, there's no point buying MSTY at 60 cents. You're buying thousands of units and they can't pay out the dividend properly because the dividend will be like 1.1 cent or 1.2 cents. And the fiat financial system's not well set up to do that. It needs things to be priced at a higher unit level so the divisibility of our fiat, our dollars, is high enough that the dividend is meaningful and fair. So I'm not saying that MSTY is going to go to zero over the next 2 years. This is just a scenario that can play out, and it can show you that MSTY doesn't go up even when you have aggressive upside movements in Bitcoin and MicroStrategy. And so we need to understand that holding MSTY over the long run is kind of a really bad recipe. Holding MSTY is a trade, and we need to make sure that we're on the right side of that trade in order for us to have sustainable all-weather income. And this trade looks like this. This is the payout option of MSTY, where we have an option premium and full exposure to the downside of MicroStrategy. And this is the payout premium of Winter, which is the inverse, which is a covered put, where we get our option premium when the price of MicroStrategy goes down, but we are fully exposed to any downside if the MicroStrategy price were to increase. And so this is a really important payout diagram. It's a very, very well-established diagram, and it represents the covered call strategy. Now, this is the P&L when you combine these two assets. So you basically don't want to go 50-50. You have to choose a side, because if you go 50-50, you basically short the most volatile asset on the planet, which is MicroStrategy. MicroStrategy is very, very, very volatile. And if you have 50-50, you're exposed to 50% of the downside, 50% of the upside, and you get some option premium so long as the price doesn't move. Not a great trade. So what you need to do is commit to being in MSTY or Winter at the right time. And this is the tool that I built in order to try and do that. So what I've done is I've got this plot here, which is the MicroStrategy price over time. And we can see that it transitions between MSTY and Winter depending on the momentum in the market. So here we've been in MSTY while MSTY's prices are appreciating, and we're collecting those juicy MSTY dividends. And then as soon as we get into some negative price momentum throughout here, we've been based in Winter, which is this blue line. So the green line is MSTY. You can see it getting absolutely smashed between July and December of 2025. And what we can see is Winter has held its value and even appreciated, especially in these last few months, upwards because there's been such a negative price movement in MicroStrategy. And so in order to maintain your NAV premium, you need to be in the right product at the right time. And I'm not saying that this works perfectly, but it will slow the rate at which your NAV premium gets eroded, because MSTY and Winter are a trade. They're not a long-term buy and hold investment. So what is the next best decision that you can make? Well, we've got to understand what the decision is. And the decision is, do I want a high yield, full income focused component to my investment portfolio, and be an active investor? Or do I think that actually I'm a passive investor and I want to go into the more income orientated value investing ETFs, like your Schwabs, your Divvies? These products produce, a 9.5% total return. It's not very exciting. They might pay you a dividend that on average might be 3 to 4%. And so you're going to need a tremendous amount of capital in order to replace your income with these products. Or you can go into the structured yield products. My favorite one in this category would be your JEPQ, which has a very mild exposure, covered call exposure, and it generates decent income in that sort of 10 to 12% range. And it is covered call sufficiently that it doesn't lose its value as strongly as these full covered call products like MSTY, Winter, Coney, Alti, QQQY, FEPI. These products are full covered call approaches. They have very aggressive covered calls. They produce a very impressive gross dividend that if you could maintain the NAV or the investment principle of your investment with, you could basically retire yourself on something as little as $100,000 or $200,000, which is amazing, but they are active products, and you need a clear bullish product and you need a clear bearish product. And so with MSTY and Winter, you do have that clear bullish and bearish product. With MSTY, obviously you want to be in that when there's bullish momentum, and with Winter, you want to be in that when it's flat to bearish momentum. These other products is what I struggle with, Coney, Alti, QQQY, FEPI, is that you don't necessarily have a clear inverse to them, and so you can't be in them all the time. With these ones, you're basically having to decide whether you're bullish, in which case you'll own them, or you're bearish, in which case you'll go into cash. And so they aren't as optimal for that sort of full-on all-weather investment income, whereas Misty and Winter have really, really clear dynamics, and you can apply it so long as you understand those underlying mechanics. And so where the decision for you lies now is, are you a passive investor, in which case you're happy to go and reduce your income but have a nice passive investment that will appreciate over time and generate income for you and help your family? Apply a structured yield approach, find that balance in the middle, or you do want to commit to the Misty Winter approach, in which case you are going to generate fantastic dividend incomes, but you have to take an active management approach. If you are interested in the active management approach, Mangosteen Private is the way to go. So I have a 20% discount at the moment for Black Friday. You can find it on my website, mangosteen.global. It represents an almost 50% discount when compared to the 2-year license, which is what I'm going to move to after the sale. So sometime in late December, I'm going to move to a 2-year license rather than the current 3-year license. And so this is the best deal that you're going to get. It's really exciting. However, if you don't think the active investment approach is right for you, then I would really recommend going and having a check out of those more passive products, your Schwabs, your JPQs, and structure your portfolio for a more passive investing approach. Mangosteen Private does have a really interesting product roadmap. We've got Mangosteen Original, which is for Bitcoin. We've got Mangosteen MicroStrategy, which is for your Misty Winter and MicroStrategy. We're going to be working on metals, gold, and DGen Bitcoin in time, as well as the S&P 500 and NASDAQ momentum approaches as well. So it's going to be a pretty powerful platform over the next couple of years. If you're excited about this, then I would jump on board. And of course, my disclaimer, this channel does not provide financial advice or any advice of any kind. Everything here is for general informational and entertainment purposes only. It does not consider your personal objectives, financial situation, or needs. Reference to any financial products are factual only and do not constitute recommendations. You must do your own research. Any investment or trading decisions you make are entirely your own. This is entertainment only, and you are listening to a random mangosteen on the internet.